just want to get your reaction from a macro standpoint to all these embattled crypto lenders like Celsius, BlockFi, and highly leveraged hedge funds that like Three Arrows Capital and their backer Voyager, which was exposed to 3AC, and what's happening in the space right now.
I think this is like a cascading effect, right? We are still leading the cascading effect from the Luna side, where it basically came down to other financial institutes which were pegged, first Celsius, then which led to 3AC. And I don't think it's honestly over yet. We're going to slowly learn about a lot of other hedge funds who have just not announced it publicly, how much we have affected. Now, when it comes to platforms like BlockFi, I could say that, people have been talking about were they over leveraged or were there like different schemes for the money which was deposited working. We have to also remember that they always have this risk compliance unit of 40% LTV to 60% LTV, and they've always, with the changes of price, have moved. But now if you have a really big creditor completely disappearing on you, and then at the same time you have this crypto bloodbath where the prices are so low, I think the whole math changes for the bigger platform. And I think that's what happened with BlockFi. Of course, we also know about them not being able to do the lending products, and also all the fines which they paid recently to SEC. And I think one thing led to other thing just adds up, especially when the market is not great and the valuations cannot be that high.
It's interesting because it kind of exposes this problem with centralized entities offering interest, fractionalizing investor funds to invest in more riskier platforms with better returns that investors may have even avoided to be conservative, and then have that bubble up to unsustainable yield models like Terra's Anchor protocol, which blew up and dominoed into, or cascaded, as you say, today's crypto woes. And it shows how interconnected these platforms and DeFi are. And so I wonder, what are the lessons that can be extracted from this?
I think, Christine, more than the lesson, of course, we all recognize that we are not ready for a programmatic stablecoin. But I think on the top of all that stuff, one of the biggest problem I would say is, look at how the recent report is that institutions are shorting Tether now. Right? That this is a market, this is an open market. Once your product is out, how do you get short, and how the market move and speculate those prices is also beyond your control. So moving from a programmatic stablecoin, we are also talking about getting shorted on a coin which has been trying to peg 101 to USD. So I feel one of the biggest lesson is how much transparency of liquidity and exposure with respect to both a DeFi protocol, stable coins, and on top of it, the leverage or the buying and lending which is happening in the space needed. And does that belongs to only the investor on an investor update side, or does that belong to the public who's also making decisions on top of it? And I honestly don't know the answer for that, because that's again dependent upon, some are just DAOs, some are not even registered entities and going with the DAO or outside US. So like in case of if Celsius goes down, like where do you really bring the case against? Like 3AC investors are all over the world. Where do you bring the case against? Same thing with Luna. Where do you really bring the case against? So
and it's interesting because at least in blockchain platforms, you can actually see the movement of money much more clear than in traditional Wall Street firms. But I want to also go into a story that we broke on CoinDesk, which is that Morgan Creek, they're looking to raise $250 million to counter FTX's offer to buy up BlockFi and have some sort of acquiring interest there. And I wonder what your reaction is as an investor yourself in BlockFi.
Yeah, so I feel like nobody has actually confirmed, apart from that call, that FTX does have that disclaimer that they can literally buy without having any of these investors from seed all the way to D round having any rights on it, and completely wipe them out. That is definitely concerning if that is true. Or is that just something, one of the really worst legal options? I do feel like having a rotating capital is not new for BlockFi. Even when we did a very early investments at the $5 million, we had Galaxy coming in, providing them an operational capital or rotating capital to use it. And I think that is just the part and parcel of how these lending businesses work. They always need their treasury to have liquidity to be able to support it. So I don't think we should read more into having it as a bailout versus having a good amount of capital to make sure if the market prices goes down, they are still able to, or if they are not able to recoup their money from any of the other defaulters, they are still able to rotate the capital. Said that, it's still yet to be seen that in the preliminary accepted term sheet, does that really take away all the investors, or the investors comes together
Right.
and figure out a middle ground, right?
Based on the call that was leaked, from what our understanding so far is that this deal will wipe out equity holders versus Morgan Creek, which they seek not to prevent that from happening. And I guess it raised this conversation over crypto Twitter that, investors take the risk, they should bear the responsibility of the downside as well as the upside. And I wonder your thoughts on that.
I think this is one of a very unique situation, because if you look at the traditional market of coming, if the company is calling bankruptcy or doing a down round, is that when it comes to the investors to think about it. But actually having a new investor which comes and say, hey, we are completely preferred, or we are completely going to wipe out everybody beyond, before we came, is something a very, very unique situation, and most of the time unheard of. And I do feel like the idea which is mentioned on the same report that, okay, at least this will help depositors not to be secondary to the lenders or the creditors to come. So there is your customers whom you have to take care of, and then you have an investors. And if you have to choose between the two, it is a very tough call. And I don't know if there is an alternative, but I'm guessing Morgan Creek is looking for an alternative. And I'm pretty sure most of the investors, especially who came in the last two rounds at a really high valuation, definitely want to save their equity out of it. Said that, I don't think, please tell me if I'm wrong about this, that there hasn't been an official acknowledgement of that clause from BlockFi or from FTX, though.
No, not beyond this call.